All right, welcome back, everyone. We're the Dividend dudes here. We got Brian and Tom, and me, the dude behind the camera here. We've got a potentially controversial topic here, and by potentially, I mean probably most definitely. So everybody, pull up your britches here. We're gonna go there. We're gonna talk about something that it's gonna rile it up here, but bear with us here. Hear us out because we've got some really good stuff to stay here. I guess the big question is, why? We're saying here, we've never seen a trending stock be a good buy. Well, first, I should say, is that a blanket statement, like literally never? Have you never seen one be a good buy?
I think if you go into history, you could find a stock that is being hyped that is a good buy, that if you bought it at the time, you would have made money. But overall, for the most part, if you're looking at a hype stock like GameStop or AMC or one of those that are just being hyped everywhere, that's red flags, because by the time you get into it, you've already missed the boat. The people who got in early are the ones who are going to make the money on that. By the time you see it, you're not going to make money.
I mean, everybody's already on the bus. You're behind it with your ticket saying, "Wait, stop the bus." I mean, that's kind of what happens most of the time.
You're getting on. There's a lot of these are pump and dump schemes. People with a lot of money or groups of people are paying to have these things hyped up so that people get on. The retail investor goes, "Yeah, I'm going to make a lot of money," and they put all their money into it, and they're bag holders, because now the big people that put all their money into it sell, the stock drops, and you don't know when to sell. They do. So there's one of many reasons why going into a hype stock is not a good idea.
So one of the things we talked about, one of the big reasons is it's often people choosing to buy these trending stocks based on untrusted or potentially untrustworthy opinions. There are a lot of people that have this opinion on something and they don't necessarily do their own research. So tell me more about that.
Well, so you're going to Seeking Alpha, or you're going to Reddit, or you're going to the different publications. A lot of these, anybody can put an article on Seeking Alpha, right? You can do it, I can do it.
Including the companies that
right
want you to buy their stock.
So they could put their own due diligence on there, say this is the great things about this stock, but they don't mention any of the downfalls or the negatives, and it's just all the positive. Makes it sound like a great buy. And that's one of the things, you have to trust the source. If you don't trust the source, then, or even know who the source is, then you really need to start questioning your life choices.
When you asked me never, right? You said, did you never find a stock? I wouldn't say never. But what I would say is, let's look at Tesla as an example. We did a video on Tesla some time ago. You have to understand the business that the stock that's being hyped is in. You have to understand the market it's in. And oftentimes the market that's being hyped is either in distress or it's a very new market. So it's not very well understood. Or if it's an established business, now I'm using Tesla as an example because their primary factor is automotive. They make cars. They have solar, they have all these other initiatives, and half of them aren't working, but some of them are. The problem is when you look at that model, that the actual profit they're making, and then you take all of the automotive industry all together, the whole thing, Tesla's worth like 20 times market cap than the entire automotive industry combined, and they're only 3% of that. So if you read a book, there's a book called Intelligent Investor by Benjamin Graham, and it talks about the over euphoria and over pessimistic mindset that the market has, where everybody gets on because everybody else is getting on, and everybody jumps off the cliff because everybody else is jumping off the cliff. But that you have to understand the underlying business model. So you have to know how they make their money. What do they do? What products do they have? What kind of competition do they have? What's happening macroeconomically? And Kodak, they developed film for a long time. What happened to that company? And people who invested in that didn't understand where the business was going. Tesla has the right idea, but as far as market cap goes, holy crap, they're not worth that, not yet.
Right.
But everybody's buying the stock thinking that they're gonna keep growing beyond that. But if you look at the overall GDP of the whole world, and I'm soapboxing too much, I'm sorry guys, but if you look at the GDP of the whole world, they're a good company, but they're not worth that. So if you're going to invest it, you're investing in a company that thinks that it can go from $780 billion to like if you wanted to double your money, they have to become a $2 trillion company, twice the size of Apple, more than like 50 times the size of the entire automotive industry. And guess what? They only have 3% of the share. That's one company. There's all sorts of other ones that are out there that have that. Am I negative on Tesla? No, but for your money that you want to have and you want to invest that money, be careful what people are hyping. We've seen it where the people who are hyping the stock are selling it as they're hyping. That's a big thing.
Yeah.
Like, it happens. You know, you see, oh, I buy this stock, and as they're telling you to buy it, they sell it. So
that's one of the things
they're
that
making
I
money.
feel like you were bringing up there, where many times people who are being paid to promote things. They're being paid to hype things. That's actually one of the things that came up while we were discussing this before recording here. That's something to watch out for also.
And the average retail investor has no idea. Like,
Right.
they have no idea this is actually going on. They just think, oh, well, this guy's a trusted advisor, I'm going to listen to him. And boom, they lose like 80% of their money. I mean, just look at how many YouTube channels out there that are, this is why we unfortunately started the channel. I mean, look how many YouTube finance channels that are out there that make recommendations that are just totally wrong. Like, they lose 90%, 60%. Like, most of the value out there is just down the toilet. And it doesn't take that long.
Even if what they're saying makes sense, it seems to make sense to you, you have to look at the person saying it and their track record. Have they hyped other things up before, and what's the track record of those? Did they make money? Did they lose money?
Being excited about something doesn't necessarily make you right.
Yeah, and Tesla is really about emotional sentiment, because you're big on the technology. You want electric cars to be the thing, and he was ushering in this whole new form of being mobile, and it was exciting. But at 780 billion versus Ford at 20 billion, you really have to do your own due diligence, do your own research to look into it. And that's what people are missing. They just want somebody to tell them what to buy, they buy it, and hopefully it makes money.
I mean, the question I would have was, how do you know? I mean, when we were talking to you at the coffee shop, and like, what have you learned from that time until now, to the point where we're even saying like about these hype stocks? Like, you've been looking in the finance space now for a few months. I mean, is it not true? Everybody's hyping the same stuff, basically. I mean, where does a person go? Where would you go?
It's interesting because I'm seeing it lead to a space of things that the hype does not equal value. We were talking about this, that things that are hyped up, the perceived value goes up, but perceived value is a very temporary thing.
It's just like my jokes.
And it's like the wind. It goes here, and then it goes there, and then it goes elsewhere. And we know this, being on YouTube and stuff. Attention is a high commodity, and so if there's a lot of attention around something, perceived value goes up. But that doesn't necessarily, so perceived value right now does not equal value over time.
Exactly.
Not necessarily. Most of the time it doesn't.
That's why they got to understand the business. I mean, if you're just buying it because everybody else is saying to buying it, you might as well you can just give me your money. I'll take it.
Now, if you don't want to do your due diligence, get a financial advisor that you trust.
Do that anyways, honestly. Do that anyways. Somebody who's actually got fruit on the tree, like they have some money, not like, oh, buy these buy this stuff, buy all these stocks and buy everything, and they don't have like a single share themselves.
Right, or like a Hans Group or a H&R Block, or somebody that's not just going to steal your money. Like who's the big guy that had the Ponzi scheme?
Sam.
Not
Brinkman?
Sam. The
No?
other guy went to jail.
There's like
had the Ponzi scheme.
There's like 500 Ponzi schemes.
Anyway,
There's
whatever.
a Kool-Aid one too. If you wanted a Kool-Aid, a spaceship guy, there's one of those.
I'll have to remember that.
Yeah.
You know what I'm talking about. He had the fund.
I don't know.
He had the hedge fund, and then he was paying people for new people coming in. They would give him money. He would take that money, pay the old people.
Well, it's Ponzi. That's the name. The Ponzi was from.
It was the most recent guy who had billions.
Oh, I don't know. We're old and boring. We don't pay attention.
I hate you. I hate you sometimes. Anyway.
So another thing that we discussed, reasoning behind this trending stocks not being a good buy, is a lot of times the ulterior motives. And I think we touched on this a little bit earlier on in this video. You mentioned pump and dump schemes, where there's like sometimes the hype has other motives behind it. And so could you elaborate a bit more on what you've seen there?
Without pissing off somebody and sending a hitman against me, I don't know, man.
Don't name names.
I mean, look at there's Reddit crowds that are out there. There's forum posts. There's social media groups that get out there. We've covered a few stocks like that, like AMC is one. GameStop has been in the news a lot, that where these groups will pump into the company, and they do so enough to actually salvage the finances of the business. I mean, I've said this. How many times have I said this? Like when you buy a stock, you're giving a company a loan. They have to pay it back. I mean, essentially, when you pour money into a stock, you're putting money into their bank. They got to do something with it. So AMC was one that they actually successfully recovered the business, but with doing that, that's temporary to me. To me, that feels like if you're going to buy GameStop, the underlying business model has to be a good one.
Right.
And if it's not a good business model, no matter what you throw at it, it's like I said, what would you tell yourself 10 years ago about investing? And I said, more money into a bad investment does not make a good investment. That equally applies here. You can't make a company do well unless the business model or the leadership team has the ability to change that model and make it into a profitable endeavor. And a lot of things, like people somehow, I've noticed this with new investors intentionally, is they don't understand that it's not very different to buy a stock than it is to you to go to a bank and try to get a loan for a house, a car, student loan, whatever it is that you want. They're going to invest in you, or if you're investing in yourself, so that you can then make the money. It's a little bit, but it adds up. And the problem that I run into is that when you see all these groups pumping and dumping with this stuff, or they try to salvage a business, good for them, but the new person, the guy who doesn't, or the girl who doesn't know anything to do with any of this financial stuff, they get swept into it. So they lose their money. They then think, oh no, this is a terrible thing. I can't make any money in stocks. And they never invest again. I mean, just look at the rates of the people who don't invest in their own company 401k. I mean, geez, even in my own company, I looked at the numbers like, what the heck? But that doesn't change what underlying like capitalism, investment, whatever greedy thing you want to put a tag on it. But that doesn't change the factor of like, hey, I want this company to succeed. That's how you take the mindset. I want them to succeed. And if they do, I want a very small percentage of that. If you take that mindset, all that pumping and dumping, day trading, options stuff, that people can make a lot of money in that, but like I said, it's a very, very small number of people. For the average regular retail investment person, they're not going to be able to do that. Some of these people who options and trade and pump and dump and do it, they do it every single day, and they watch the ticker symbol every second. Do you really think you can compete with that? So if you're really trying to start investing, that's why a lot of people say just buy an index fund, buy a mutual fund that's got a long-term track growth record, or somebody's got a hedge fund manager who really knows what they're doing. That's why they do that, because you're not going to compete with an army of Redditors that have their own company that day trade every second of the day. You know, Taylor Swift might say something wrong, and all of a sudden the country records label that was invested in goes around, or maybe she says something good, and then it goes all the way up. All those day traders on it are there. In fact, in our monthly stock purchase we just made this month, videos around here somewhere, Pfizer had 95,000 short-term options and trader calls. So all the day traders and the option traders jumped on it when they said that they weren't going to make as much money as COVID. 95,000 in one day. That's a lot of pumping and dumping. That's a lot. Yeah. And the soapbox. I'm sorry, guys.
Yeah, no, you're good. Again. You're good. The other thing I felt like we wanted to bring up here, and we did also touch on this before, is just how a lot of these things tend to be a early adopter thing. Like a lot of the trending things, if you're not early adopter, then you don't really make money. We've seen that also, and I think Brian, you were saying something about. And we couldn't find I can't remember if we could find the originator of this quote, but it was time in the market always trumps timing the market. I tried Googling it and I couldn't find the originator. So if somebody knows who originally said that, then please do let us know.
Comment down below. I looked, it was me, I originated it. No, I looked a lot too, and it's often Warren Buffett who's...
Don't you mean you're not the original Napster? Is that what that is?
I am not the original Napster, no.
Fine.
Nobody says that anymore, credit. Tom.
But it's still equally true.
It's not that low.
Yeah, so I feel like the question here is, and we've been talking on this, but I just want, just for everyone's sake, for my sake, for everyone's sake, what would you be doing instead? If we're saying trending stocks, not a go, what would you be doing instead of that?
Well, what we do in our portfolio.
Yeah.
I mean, that's what's worked for us.
You find somebody who is making money, that is doing it in a way that is safe, and you emulate them.
And the guy that taught me had $350 million. You would never know it. I mean,
Right.
he was very humble about it. That's another thing too, is don't look for the guy who's showboating everything.
Right. So look at our portfolio and see how it's grown.
See how boring and uneventful it is.
Yeah. And that's an easy, safe way to make money. And people who are looking at the hype stocks don't want easy, safe, and slow way of making money. They want to put $1,000 into a stock today, and a week from now,
They want
it goes up to
$2,000.
$20,000.
Yeah.
So now they got this big profit that they could take, and that's what it's gambling. It's a lottery ticket, whatever you want to call it. It's unrealistic.
I would say.
And when you were talking about people getting in, it's the people who started with like the GameStop calls are making the money, and then all the retail investors that finally got into it,
they're the ones getting suffered.
they're the ones that are holding the bag, because as that goes up, that's when they get into it, and then it drops and they're the bag holders.
Yeah, they're too. I would also add a story to that. Like I've gone into the SPAC space, SPAC. It's the special acquisition companies and the IPOs and the OTCBBs, the pink slips. So if you don't know what any of those are, you're probably pretty new. Welcome. But if you do know what those are, that is a very risky game, because a lot of those smaller companies, those new IPOs, their financials. I mean, just look how many IPOs that come out that the stock craters right after it comes out. You know, they get a lot of initial funding, but then they find out when they finally get their financial reports that now you have to do some reports to even go public. But then they find out what the actual underlying business is, and then the investment itself becomes apparent of what you can actually make from this. And there's people behind that. Like the business that you're buying, it's an actual company. They have to do something. So I bought, I'm big into, because they're talking about like the hydroponic farming is the next big thing. Aero Farms was one that was going to go public. I actually bought some of that before they went public, and they still aren't public. Thinking that they were going to go public. Why? Well, food shortage and food scarcity for the next generations. I want to invest in companies that are going to fix that problem. I want my children to have food. Pretty altruistic reason, you know, hey, it'd be nice to eat something, and maybe too much, but the thought was that, hey, I'm going to find these entry-level companies, and I looked for like 4 years. I looked really hard trying to find this, did all the research, spent all this time, and every company that I could buy. Oh, that one didn't go public. Oh, this one got gobbled up by a big pharmaceutical. Oh, hey, Monsanto ate that one. You know, but there's always something that got in the way that I couldn't quite make it. And I was, for that short period of time, for just that, I was one of the 98% of people that wasn't really making anything, because inflation will come in and eat you alive if you do nothing. So if you're going to do that, do it with dividend check money. Don't do it with your seed money. Do it with something that you can afford to lose. And if you paid for your money, you bought, you know, we bought Pfizer and ExxonMobil, we bought those the last 2 months. They pay you a dividend, take that dividend and invest in one of those if you want to try it. Because then you know you still have your money principal left over that you can get on dividend check on next quarter. So if you make a mistake, not a big deal. But don't YOLO it. Don't throw everything into there, because pumping and dumping is a thing. It's really, like, learn about it. It's really a thing. It's out there. It's all over YouTube.
And when you look at IPO history, initial product offerings, and SPACs, you will see that a lot of times they'll come out at $17 and it'll go immediately down to 10. And it will take 4 years or 5 years for that to get above $17 again, as they prove they can profit and make money, because most of these companies aren't profitable. Or it never goes above 17 again, and you're just out that money. And no matter how long you hold it, you're just gonna have a loss. So you might as well sell it. So there is absolutely no guarantee that this IPO, even if it's a great company, is gonna go above its IPO price.
It's kind of like, hey, we got all this money. What do we do now? Like, oh, what's next? It takes some time to figure that out. I don't know if this answers your question. I'm hoping it does. I know we scrolled a little bit, but there's a lot that goes into this stuff, and I think it's better to take a slower, methodical approach with things that you understand than risking it on something that you don't, especially if it's your money. Like, you worked for this. Why would you throw it away?
All right, everybody, thank you, and we'll see you next time.